Most traders think that to become a successful and rich trader is knowing that strategy which works 90-95% of the time, or having an indicator which can work 90-95% of the time. But what they don't realize is there is no indicator or there is no strategy which can work 90-95% of the time. I have been in stock market for more than 20 years now, and I have not seen any strategy or any indicator which can work 90-95% of the time. But to become a rich and successful trader, what you need is a trading strategy which can work most of the time, trading strategy which can give you good risk reward. And one more thing you should know, that trading is not random. Every candlestick has some psychology behind it. Every price action patterns have some psychology, some story behind it. Why it happens? Because of the human emotion. We all traders are human beings, and all us have human emotion like fear and greed, and that is what you see in the chart. That is what price action tells you, and that is the objective of today's video. In today's video I am going to discuss about support and resistance hidden facts. Why I am saying hidden facts? Because support resistance everybody knows that, but why I am saying that hidden facts? Because many people don't know about psychology behind support resistance. Many people don't know about the psychology behind what happens when support fails, what happens when support breaks or resistance breaks. So that is what first thing you should know, what happens on other side of the market, what happens with the other traders. So that is what I am going to discuss in today's video about support resistance hidden facts. Before that, a small announcement. As there were many requests from my old webinar students to start a Telegram channel to post daily end of the day chart analysis. Earlier it was available for webinar students. But now what I have done, I have opened a new private Telegram channel for members who want to have the daily end of the day chart analysis of Nifty Bank Nifty. Every day after market closes, same night I take the screenshot of Nifty Bank Nifty. I mark the important levels like support and resistance, and I'll show you on the chart where was the entry, where was the exit, where was the breakout, where is the stop loss, where was the take profit. Everything will be marked on the chart in Nifty and Bank Nifty, and I'll post it on my Telegram channel. How it can help you? It can help you to know how you have to take the trade. As they say, patterns repeat itself. Next time when you see same patterns, you know that where you have to enter, where you have to take profit, where you have to keep stop loss. So that is going to be my new initiative, pivot call end of the day chart analysis. You can see the Telegram link below this video in the description section, and if you are interested, you can join my private Telegram channel for end of the day chart analysis for both my webinar students and also for non-webinar students. So that is the announcement. So now let's move to my laptop screen and let us start with the presentation on support and resistance hidden facts. Hi guys, welcome to this support resistance concept. Why I mentioned as a hidden facts? Because here I am going to discuss about psychology behind support and resistance. You must have seen many videos on support and resistance, or you must have read it on Google or wherever it is, but most of the time they will just give the bookish knowledge. But here I am going to give you psychology behind support and resistance, why support and resistance works, what happens when support and resistance doesn't work. That I am going to discuss briefly in this YouTube videos about support and resistance hidden facts. So let's go to the first slide. What is support and resistance? I'm sure most of you already know it. There is no something new in this slide. New will come in the next slide when I discuss about the psychology. Here I'll just brief you about support and resistance for people who are very new to technical analysis. Support is a price where downtrend can be expected to pause due to a concentration of demand or buying interest. Very simple, right? That everyone knows that. For example, this is the chart. Okay, this is the chart of some XYZ stocks. So when price is trading here, when price is trading at this level, you already know that this is the support, right? Why this is the support? Because two times price when came back to this level, it took the support and it went up. So you know that next time when price comes to this level, this is where support is. That is where there is likely to have a buying interest from trading participants. So that is what the support, that you already know it. Resistance is just opposite of it. Price level where uptrend can be expected to pause due to concentration of supply or selling interest. Resistance also same, like if price went like this, so you see that there are two times price got rejected at this level,
then you know that next time when price comes here, there is a resistance. Support a reversal level where price turned from bearish to bullish. Support and resistance also a level where bearish market turned into bullish market. Suppose this is the bearish market, right? So you know that this is the bearish market trading like this. And finally, at one certain level, bearish market turned into bullish market. That is also your support. Or same thing, you see that some chart is in the strong up move for a very long time, and then suddenly there is a crash. This is also your resistance level. So how I said support level, same thing like this is also resistance level. Resistance level doesn't mean that you have to see 2-3 times price touching that certain level. Even once price reverse from that level, then it becomes your strong resistance. Where a price turned from bullish to bearish, the main point where price reverse, that also becomes your support and resistance. So support is where demands exceed supplies, and resistance is where supply exceeds demand. So that is the support and resistance theory. So now next one we are going to discuss about the psychology behind the support and resistance. So you should know one thing, fear and greed are the biggest emotions seen in the market because trading participants are human beings, right? So you see the fear and greed on the chart, fear and greed in the market. Why it happens? Because trading traders are nothing but human beings, right? We all are human beings and we all have that emotion called fear and greed. So what happens when price comes to the support level? When price comes to the support level, traders who missed the rally last time don't want to miss this time again. So that is where greed comes into the role. So what I mean by that, suppose there is a XYZ stocks. There is a XYZ stocks, okay, which was trading say around 80 rupees. For a very long time, it was trading at 80 rupees. So many people were not showing any interest in that stocks. And suddenly some news came into that company and that stock went to 200 rupees within 6 months, more than double. So 80 rupees stocks went to 200 rupees because of the some favorable news in that company or products. And people who did not buy here, they missed the rally, right? They thought when the price started going up, they thought, let it come down, I'll buy it, but it didn't come. And after that, it kept on going up. And finally, it started trading at 200 rupees after a few months. So people who could not buy at 80 rupees, they repent their decision of not buying that share at 80 rupees, right? Even though they know that that's a good company, everything, they were in dilemma whether to buy or not to buy, and they missed the opportunity. Assume that suddenly some market crash happens, some recession or something happens in the market, and every stocks start falling, and that stocks also start falling, even though there is no fundamental news, any bad news or anything. Suddenly that stocks also start crashing along with the market, and it comes to 80 rupees. People who missed the last time, they will now start aggressively buying it. Why? Because they know that last time from 80 rupees it went to 200 rupees. They think that this time also again it is coming back to the same level where I missed the opportunity, and they'll start buying it. That is what the psychology happens in the market. When price comes to the support level, who missed the rally last time, they don't want to miss this time again. Again, this is the one group of participants. There are another group of participants. As price falls back to the support level, the trader who were long and made money last time will take long position again at same level to make more money. Same example which I given you, that stocks which went from 80 rupees to 200 rupees. Let me again tell you that XYZ stocks, it was trading at 80 rupees for a very long time. Many people did not buy that time, then it went to 200 rupees. But the traders who invested here at this price, and they made good profit when price started going up. But now once they sold price somewhere here or wherever, now they know that if I buy again, then I am buying at higher price. So what they are doing? They are waiting for price to come to this level. They know that last time I bought at 80 rupees and I made a good profit. If price comes back to that level, I'll buy again. And fortunately for them, market crashes every stock comes down, and this stock also comes down to the same level where it made a big move last time, then traders who made money last time, they will also buy it. In earlier example, I said people who missed this price, they will buy it. But this time, trader who made profit, they will also buy it. That is also nothing but human emotion. That happens with everybody, right? What happens if the support and resistance level breaks? For example, you know that this is the resistance level, and next time price doesn't reverse from here, it starts going up. That is called breakout, right? That everyone knows that. So what psychology works here when the breakout happens? So that is what we are going to discuss here. Those who were short at resistance get trapped when they see price going against their direction. They are in panic to place buy order to cover their position. So now let us discuss with the whiteboard to understand it better. This is the resistance. 2 times price came and took the resistance. 3 times price came and took the resistance. So now people know that, oh, there is a resistance. There is a resistance. Suppose, assume that some XYZ stock trading at 500 rupees. Okay. Every time it came to 500 rupees, it reversed. So what happens at that time? So people remember this level, right? Every time it came to 500, it reversed. So now they are waiting for price to come to 500. So when it comes to 500, there are aggressive sellers start selling. Aggressive sellers start selling here because they are assuming that 3 times market went after this time also market was. That is what they are assuming. But for their bad luck, this time market breaks this level. Now what happens? What is the psychology here? Here what happens? The traders who shorting here, now they are in the panic. Why they are in panic? Because now they are in loss, right? They will expect market to go down, but it's going up. Now what's happening there? They are in the panic. They are in the panic to cover their position, because initially they will wait for some time thinking that market will reverse, but they see that market is going in another direction. Their losses are becoming bigger and bigger. They are getting panic, and they will be in panic to cover their position. So when they're selling here, how they have to cover their position? By buying it, right? So this will add more and more buy orders. That is how breakouts happen. So that is the first type of participants who are in panic, who shorted it. Now they have to cover their position. That's what I discussed. Those who are short at resistance get trapped. They're trapped, right? Because their position is going against their direction. When they see price going against their direction, they are panicked to place buy order to cover their losing position. When there's a huge buy order, what happens? It's obvious, right? When there is a huge demand, price will go up. So that is what happens in market also. Second group of traders who had stop loss above resistance get triggered, adding fuel to the big move on the upside. Okay, one I discussed that traders who were in the panic to cover their position, right? Traders who are in panic to cover their position, because 4 time it doesn't reverse, it starts going. And short sellers, first group I said, they don't have the stop loss. They're waiting and seeing whether market will reverse. When they see that it's not reversing, now they're in panic to cover their position. Another group of traders who are shorting here, but they already have their stop loss. What is the stop loss? Buy order, right? So there is a huge buy order or a stop loss here. Again, that also adds fuel to the momentum. So which gives a big move upside. So that is what resistance here. And when it breaks, there is huge stop loss order. All short traders, they have stop loss. Third type of traders who are waiting in the sidelines to enter the position once direction is clear. There are third type of traders who don't do anything when price comes to this level. They will not anticipate whether market will go up or go down. They are more of kind of defensive kind of traders. They will wait for confirmation. They will wait for confirmation of the trend. People who are already shorting here, they are aggressive kind of traders who don't wait for confirmation. So when these traders, defensive traders, they see that there's a breakout with a big bullish green candle, they start buying. Now they start buying aggressively because now direction is clear. Now that resistance has been broken. So what they will do, they will start buying. So this is third type of participants, third group of traders, they will start buying. Again, that adds fuel to the fire. And last type of traders are called breakout traders. There are kind of traders called breakout traders. What is breakout traders? Breakout traders are only looking for breakout opportunity. They only look at all the charts, all the stocks, commodities, Nifty, Bank Nifty, everywhere they will keep looking only where there is a breakout. They mark the level. When they see the breakout, they'll jump into the rally, will only add fuel to the momentum. So that is also again will add fuel to the momentum. So when there is a breakout from the resistance, this breakout traders start adding their position. So that makes the momentum strong. So that is how breakout happens. So that is what I discussed about psychology behind support and resistance and what happens when there is a breakout. That means what happens when there is a support and resistance breaks. Just for illustration purpose, you should know that market is like a tug of war. Market is like a tug of war between buyers and sellers. So that is what market is nothing but it's a fight between buyers and sellers. So you will see buyers on one side in the market, on one side buyers, one side sellers. When there is a tug of war, what happens? If there is a equal strength on the both sides, nothing will happen, right? Same thing happens in the market. When there are equal numbers of buyers and sellers, market will be sideways. When there is a higher number of sellers than buyers, then what happens? Market will crash. When there are higher number of buyers, then what happens? Market will start. So that's it. Trading is all about buyers and sellers. It's a tug of war between buyers and sellers. When you look at the chart, you will see only buyers and sellers on the chart. How to know buyers and sellers? You will not see like this kind of image on your chart, right? What you will see candlesticks, right? You will see candlestick on your chart. Green candle, you will see a red candle, you will see a doji candle. All this kind of candles will only tell you the story, will only tell you about the buyers and sellers trade. So if you understand this concept that trading is nothing but about buyers and sellers, price action is nothing but it is about buyers and sellers. Chart reading is nothing but it's about buyers and sellers. So that is what we discuss in our day trading webinar called Day Trading with Pivot Points and Price Action. We discuss where there are buyers, where there are sellers, where you should buy, where you should sell, everything. So if you are interested, you can click the link below this video in the description section and you can enroll for upcoming day trading webinar with pivot points and price action. Now, having discussed about all these slides, now we'll go to the real charts. Now we'll go to the charts of Nifty, Bank Nifty. Let me show you some real life example of breakouts, supports, resistance, and you'll see that how human emotions comes into the play in price action on the charts. Okay, to now understand the support and resistance concept in much better way, let's look at the live chart in Nifty. Let's go to Nifty and let us see the analysis of 17th of May in Nifty. What happened on 17th May? How candlestick reacted near the support and resistance. On 16th May, first candlestick opened with a huge red candle. There was a sudden reversal and then again there was a reversal. So where exactly Nifty reversed? Nifty reversed from this level. So where is the resistance and where is the support? This is going to act as your resistance, right? This is the most important level, which is resistance, which you have to observe on 17. So what you will do, you will go and mark that level. So let us mark that level as a strong resistance and let us see how candlestick behaved on 17. So let's replay the candlestick and let us see how price action was near that level. Okay, so you can see that from the price action, first candle opened with a bullish candle, then started making consolidation near that resistance. Exactly near that resistance, started making consolidation with a small tiny candles. You can see that except this red candle, all other candles were small candles. And when breakout happened, it made a huge green candle. So that is what I said. When you have to break something, you need the strength, right? Same thing to break the resistance. Buyers need strength, right? Buyers in needs in big numbers. So that is what the strength you can see in this candlestick. So you can see that after the breakout, there was a non-stop one-way traffic till the next few. So only series of green candles. So that is what happens when there is a real breakout. There will be non-stop momentum on one side. Why it happens? I was telling you that near the resistance, there are many sellers expect price to go down, just like how it happened earlier. And when they see that price is not going down, instead it's going up, they're in panic. That is what the fear, one of the emotion in the market, right? They're in panic to cover their position because they know that it's not going down, it's going up. Their losses are becoming bigger and bigger. So they are in panic to cover their position, adding fuel to the momentum. So there is a fear. Second type of the traders, I said, where they expect price to go down, they are already shorting near that resistance, but they have the stop loss. They have a big stop loss. So what is that stop loss? Buy order, right? So when they're shorting, they have the stop loss as a buy order, and they're seeing that all their buy orders getting triggered. So that adds to the momentum. Third type of the trader, I said, who are waiting in the sideline. They are not doing anything when price comes near the resistance. They are looking for the confirmation. They are defensive kind of trader. They will trade only when they see the confirmation. When they see the confirmation that there is a big green candle breaking that level, they will jump into this trade and they will also try to make profit. What is the emotion then? Greed, right? They are in the greed to make profit, and that you can see here, both greed and fear you can see. And then last type of traders who are breakout traders. And when they see the breakout, they start entering this rally expecting to make a good profit. Again, there is a greed. So there is a mix of fear and greed, both you can see here in this chart. So sellers who sold near the resistance, they are in the fear. And buyers who went long after the breakout, they are greedy to make profit. So that is what you can see with the help of candlestick. So that is what I said. Psychology behind support and resistance, psychology behind the breakout. So that is how breakout happens. Let me go to Bank Nifty and let me show you a few examples of this support resistance concept. Okay, now let us look at this Bank Nifty chart and let us see on 11th of May. Let us see where was the support and resistance on this chart. So if you look at this chart on 11th May, you will see that big resistance is here. All right, that is where Bank Nifty reversed after a big move. Right, this is the level where Bank Nifty reversed. So this is the resistance. And where is the support? Support is the first candle low where there was a big move. So this becomes your support, is the first candle. So now what you can do, you can draw a horizontal line on both the support and resistance to see how price reacted to that support and resistance. Now let's play the candlestick on 11 and let us see how price reacted that at that level. Okay, so you can see that this was the demand zone. When price came near the demand zone, just look at the candlestick. Just look at the candlestick, and then there is a big candles. Then there is a series of big candles, right? So that is what I was telling you, that when price comes near the support or resistance, candlesticks become smaller and smaller because still there is a tug of war between the buyers and sellers. And who became stronger here? Buyers become stronger, and you can see with the candlestick. So that is what the support and resistance. If you draw a proper support and resistance, and if you observe candle very closely, you can see the psychology behind buyers and sellers. You can see that candlesticks become smaller and smaller when it is taking support. But if there was a breakout, then candle will not be small. Most of the time, candle will be like this. So that means there is aggression, because to break something, you need aggression, right? You need strength. If you want to break anything, you have to put the strength. Same thing, when sellers have to break this level, break this support, then they need a strength, right? So that is how candlestick will tell you the psychology behind buyers and sellers. Now let us continue with the replay of this candlestick and let us see what happened to that demand zone. Now this demand zone will come here. Why? Because now this candle low is the demand zone. Because after price reverse, this candle low becomes the demand zone. So now let's continue with the candlestick, replay button, and let us see. So now can you see that what happened when price started coming near this demand? So earlier there was a big bounce from that level, right? Earlier there was a big bounce from that level. So that became your support zone. So when there was a big bounce from there, that became your support zone. And second time when price came here, was there any small candlestick? No, right? There was a huge candlestick. So what it says that aggressive sellers present here. So that is what adds fuel to the fire. That is what adds fuel to the momentum. If you observe clearly price action candlestick on the charts, you will see where there are buyers, where there are sellers. So when it is taking support, most of the time you'll see like doji candles, pin bar candles taking support. But when breakout happens, you will see a big candles like this. So I have shown you in the Nifty chart also, right? I shown in the Nifty also, where you see that when price came near the resistance, it was making small candles, and when breakout happened, it made a huge green candle when there was a breakout on the upside. So that is what this video is all about: support and resistance hidden facts, how you have to read the charts as a tug of war between the buyers and sellers, and you have to observe the candlestick near important levels. That will tell you the emotions of buyers and sellers. That will tell you who is the stronger. Buyers are stronger or sellers are stronger, and accordingly you can take the position. And also I have started a new initiative called End of the Day Chart Analysis for Nifty Bank Nifty, for people who want to know the analysis of this kind of charts daily basis on Nifty Bank Nifty. You can join my private Telegram group. You can check the link below this video in the description section. And every day after market closes, I will post Nifty and Bank Nifty charts marking important levels like support and resistance, where breakout happened, where is the entry, where is the stop loss, where is the take profit. Everything will be marked on the chart and will be posted on Telegram.
So that is what the psychology behind support and resistance, psychology behind the breakout. So that is how market works. Market is all about buyers and sellers. It's like a tug of war between buyers and sellers. Who are stronger, they will take market up or down. For that, you need to know the art of chart reading. If you want to learn price action in more details, then you can join my webinar on day trading with pivot points and price action. Also, I have introduced options course, and also there is swing trading course. And for people who are very new to stock market, anybody can trade in stock market. That's it about today's video on support and resistance hidden facts. I hope you have learned something new in this video. I'll see you soon with a new video. Until then, have a good time and take care.